Rams here from FXTZ, and in this video guys I want to take you through the #1 reason why most traders fail in the markets. So let's begin with a scenario. Let's say you've done some analysis on a currency pair and your analysis is telling you that the price could possibly go higher. You then decide to enter a buy position with 1 unit and you place your stop loss 30 pips below your entry. The market then begins to go against you, and after a while it starts to approach your stop loss. So what do? Well, most traders will begin to move their stop loss further away from the price with the hopes that the market is going to turn back in their favor. And the reason they do this is because they don't want to actually realize a loss, because they feel if they realize that loss, that would mean that they actually failed, their analysis would have failed and they are no good essentially, which is not the case. However, let's carry on with the scenario. So the market continues to go against them or against you, and you begin to move your stop loss further and further away until you realize that you are in such a big losing trade now and you cannot bear to lose anymore. Therefore you decide to abort the trade and you exit at a far greater loss than you had initially planned to lose. So now you're feeling emotional, you're upset that you've lost this money and you're desperate to make it back. Therefore you enter the market with double the lot size of your first position with the hopes of making that money back a lot faster. So to your luck, the market has gone in your favor this time and you continue to watch the P&L like a hawk. Although you have already predefined your risk and a target for yourself, because the position is now exposed to a very high risk, it makes you fearful of the markets. So eventually your P&L now reaches break even, you make back what you had lost and you quickly decide out of impulse to close the trade, and you're now feeling a lot more calm, you're feeling a lot more at ease because you've made that money back. You continue to monitor the markets now and you find that the price actually reached your target that you had set for yourself, and you would have made a lot more money if you had just let your trade run. Now, the first error that you have made in this scenario is that you doubled up on your lot size after a losing trade, which you should not do. However, let's carry on. So you're now annoyed about this outcome. You're feeling frustrated that you left money on the table, and you then see the market continue to go further. Therefore you enter the trade once again out of impulse with the same amount you had just risked to make your money back, and the market then starts to quickly go against you. It then quickly hits you that you had no real plan in the first place for this trade, and you put your stop loss in an area which is not logical, not based on any technical analysis. Therefore you quickly panic out of the trade and you realize an even bigger loss than the original one. Now, why did this happen? This happened because you had doubled up to make your money back, and because you made your money back so quickly, you felt confident that you could do it again, and then the market went against you. Now, all traders would have experienced this sort of scenario in one way or another, and there is a reason why a trader can fall into this mindset. So at the essence, what is actually happening here? Well, you're letting your loss run and you're cutting your win quickly, which goes against the well-known trading axiom in the markets, which is cut your losses quickly and let your profits run. Now, although most traders have heard this quote many times before, why do they continue to do the opposite of what they know they should? Let's take a look at the mechanics behind this faulty trading mindset. Mechanics behind the 90% of losing traders. Now, William Eckhart, who's a well-known trader, has found that there is a correlation between innate human biases and the tendency for the 90% of traders in the markets to lose money. Now, William Eckhart is a very well-known trader. He's had a lot of success in the markets, and he has found from experience that this statement is very true and relates to the 90% of traders. So he says there is a persistent overall tendency for equity to flow from the many to the few. In the long run, the majority always loses money. The implications for the trader is that to win, you have to act like the minority. If you bring normal human tendencies to trading, you'll gravitate towards the majority and invariably lose. Now, this all comes down to the contrarian mindset. So behavioral economists Daniel Kahneman and Amos Tversky conducted research to demonstrate that people inherently make irrational investment decisions. So in this example, subjects were given a hypothetical choice between a sure $3,000 gain versus an 80% chance of a $4,000 gain and a 20% chance of not getting anything. So let me give you a few seconds just to think about what you would do in this scenario. Right. So the vast majority of people preferred the sure $3,000 gain, even though the alternative had a higher expected gain of $3,200. So what they're saying here is that although the higher expected gain would have been 3,200 had they went with the 80% chance of a $4,000 gain, they still went with the $3,000 gain because this was the guaranteed outcome for them. So they then flipped the question around and gave people a choice between a certain loss of $3,000 versus an 80% chance of losing $4,000 and a 20% chance of not losing anything. So what do you think people did here, and what would you do in this scenario? Again, I'll give you a few seconds just to have a think about it. Right, so the vast majority chose to gamble and take the 80% chance of a $4,000 loss, even though the expected loss would be $3,200. So what does this tell us here? In both cases, they selected the alternative with the smaller expected gain or the larger expected loss. Therefore, this shows us that there is a natural human tendency for the majority to make irrational trading decisions. So what they concluded is that there is an odd tendency in human behavior in regard to risk and gain. People are risk averse when it comes to gains. Think about that once again. People are risk averse when it comes to gains, but are risk takers when it comes to avoiding loss. So this tendency relates highly to trading, and it explains why the majority tend to let their losses run and cut their profits short, which goes against the well-known axiom of let your profits run and cut your losses short. So what's the solution here? The solution is to always remember this example every time you're about to make this typical trading error. Whenever you are about to cut your profits quickly, or whenever you're about to let your losses run more than you had planned originally, always think back to this irrational human tendency and make sure that you follow the contrarian approach. So always consider the alternative before making a decision. Before any trade, you should have already planned your stop loss and planned where you're going to take your profits. Therefore, there is no need for you to mess about with the trade once you're already in it, because all the planning has already been done. Therefore, all that is left is for you to execute the plan. So sticking to your plan is vital towards your trading success. There is no need for you to bring any emotions into it, because the plan which you had taken prior to taking the trade should have been made with an unemotional approach, an objective approach that is, and all that is left is for you to follow that plan and either let your stop loss get taken out or get taken out at a nice profit. So I hope this was very informative for you guys. I hope it gave you more awareness into this typical trading error which causes the majority to lose. This is the number one reason why the majority lose money in the markets. So I hope you've enjoyed this video. If you did, please like the video, and also don't forget to subscribe so every time I upload a new video you can be updated and be the first to watch it. Now, if you have any questions, you can message me via the free Telegram channel where the link is in the description. And if you have any suggestions for any topics that you would like me to cover in the coming weeks, then also leave a comment and I'll be more than happy to take them into consideration for the videos that I'll be uploading in the future. So safe trading and goodbye for now.